This conference will now be recorded.
Okay, good morning, everybody. This is Greg Morton. It is Sunday, December 19th, 2021. This is the weekend video update for Canslim growth stock investors from the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. And as we currently know, all investing has substantial risk of big losses. We want to learn first and only then invest. So today we'll look at the impactor as we do every weekend in no man's land getting whipsawed severely. Current trading plan is not. Look at a new Marketsmith feature that I left out of our meeting this week. Look at a checklist of constructive things to do this week. I'm going to give you stock list to review and then mention our monthly educational meetings as we head into 2022. So as we know, and as we are experiencing, the M factor is the most important letter in Canslim. We know that 3 out of 4 stocks will follow the general market trend. And per O'Neill, we want to diagnose, want to interpret, we don't want to predict. And so we look at the action of leading stocks, looks at the action of stocks owned. That's not going to take long. And we're looking at the market pulse, distribution, day count, and price and volume on the indexes. So let's get out of here and flip over to Marketsmith real quickly and look at the indexes. So here's the NASDAQ on the daily. Here's 10% off, so we're not officially in a correction yet, but this is ugly. 21-day moving average line is down, 50-day is still up, but the index is mired under those. That is not constructive at all. And we've been flipping back and forth, red and green and yellow. We'll see this in the coloring book. And somehow Marketsmith moved my color ribbon down here in the volume bars. So I'm not quite sure how to fix that and get it back up here where I wanted it. Also notice on this chart, so here's our rally day over here. We came within 30 points of undercutting the most recent low, which was the day before the rally day. So we focus on the most recent low. If that gets undercut, not closed below, but if that gets undercut, then this rally attempt's dead. And so we came real close to that. We also undercut the follow through day low. That is a sign that this is has potential for this follow through day to fail. If it closes below the low of the follow through day, I think it's either over 80 or Eric Kroll said it was over 90% chance of failure of this rally attempt based on what he had studied. Also, if we undercut this low, the window of opportunity will close back. So here's the S&P 500. This is the only index that's holding above the 50-day moving average line. So that just shows that. You'll note there was very high volume on Friday. It was quadruple witching, which only happens once a quarter. So we're going to see that on the stocks and the indexes for that particular day. And then here's the NYSE. Again, it's under the first 3 moving average lines. Doesn't look good. Here's the Dow. Even it has lost the 10, 21, and 50-day moving average lines. Here's the small caps Russell. This looks the worst of all. While it did sort of have a support day Friday, it is officially in a correction. It's under the 10% line. Moving average lines, the 10 and the 21 are just slicing through the 50 and the 200. So you have those bearish crossovers or death crosses, as some people call them. It's not a signal. I just watch it. I don't put extra weight on it, but I do pay attention to it. And if we go down just to kind of look, so here's the Qs equal weight. Look how bad that is. That's down at the 200-day moving average line compared to just the Qs, which don't look as bad. So that again confirms you've got the big cap heavily weighted stocks are holding up the indexes while we have really a bear market in growth stocks underneath the surface, I think is the appropriate way to say it. So if we flip over and look at the coloring book, this has just been a wild week. Look how quickly lately these colors have changed, and these are not, the MMTS is not a fast moving signal. IBD this week went to green, and that really all happened after the Fed press conference. So that was after 2:30 p.m. on Wednesday. And then the next day, growth just got slammed. NASDAQ was off 2.47%, where it was only up 2.1% on the follow-through day that we had on both the NASDAQ and the S&P 500. So there were our follow-through days. Those were day 8 follow-through days, and the rally days are back up here. But even, the MMTS was not even green on the follow-through day, and then it flipped back to red. NYSE's flipped down to yellow. IBD this week went from red to green to yellow. So 2 changes in those 5 days. And even worse, NASDAQ MMTS went from yellow to red to yellow to red. So got 3 changes this week on that signal. So just not constructive. My buy sell day count is terrible. I only have 5 buying days and 13 selling days in the 25-day window, which goes back to that orange dot. Have a lot more red recently than green. Market school exposure is only 1. The power trend's under pressure. IBD flipped back to under pressure in the market pulse call on Friday. So just a choppy, ugly environment still right now. I don't think there was anything else to mention on there. We only have tomorrow, as of Monday, we will have just 9 trading days left in the year. The markets are closed Friday on Christmas Eve, but they are open a full day on New Year's Eve. So we have 9 full trading days left. They're closed this Friday coming up, and I put that on there. And go back over here. If we look at the group teaching portfolio, just been an ugly month, lots of red. This was distribution day. I need to put that on there. Oh, one thing, sorry, going back to the coloring book. So in the current count, the big picture only has 1 distribution day count on the S&P 500. That's in black, but the ones in white are my count within the 25-day window. So we have 9 distribution days on the S&P 500 and the Dow in the last 25 days. Although again, IBD doesn't count them. Once they go to red, they quit counting, and so I keep counting, and I just put them in white. So I know that's my count. The black is the official IBD count. So group teaching portfolio, giving back, coming in, down to only up 13% for the year, and only 25% invested currently. And could be less, could get knocked out of some more stuff if we have another week ahead, so to speak. So let's see, we looked at all of that. A couple other things to look at. Go back to big, there we go. So this is Matt Caruso. You can follow him on Twitter. He posts this, so when it's pink, he's saying this is a weak environment, and this is just tracking the new highs versus the new lows on the NASDAQ. So we've had a lot of net new lows. Tried to turn green for a couple days there, and then again back to a lot of net new lows. Here's what Matt said about it Friday after the market closed. So yeah, and I was pointing that out. The S&P 500 is the only thing still above the 50-day. And then IBD has a similar indicator. So this is under psychological indicators. So here's their chart of the high-low ratio. So you can read that, or you can look at it on investors.com. Here's the CNN Fear and Greed Index. So sometimes when it moves to extreme fear, well, we're getting near a bottom. So we'll see. These are all secondary indicators. So we're really looking at the stocks and the indexes and price and volume. Bulls versus bears. So the bulls have come down. down around 40%, and the bears have come up. If these ever cross over, that's a pretty good signal. We're close to a bottom, and it gets really bad when that happened. So there was the COVID bear was the last time that happened. And put call ratio is not elevated, so we don't see extreme fear till it gets up to around 1.15. And then I put this on Twitter this weekend. This is an ugly stat. 43% are above the 200-day moving average, which means 57% are below the 200-day moving average. And some more weakness. S&P 500 accumulation distribution's gone to E. NASDAQ's gone to C minus under the 50-day, and then the advanced decline line continues to be in a downtrend. So in light of this, I think that my opinion or my interpretation of the M factor is it's brutally difficult right now for Canslim growth stock investors. We're seeing extreme volatility in a lot of factors. So current trading plan on the buy side till we see some real accumulation come in is no. And if the current rally attempt fails, of course, we'll be starting over, looking for a rally day, and we may even get a strong second leg down or even a third leg down. No way to predict in this poor market. So currently the time for this is my thought for the week, the thinking man sculpture. A lot of things, a lot on his mind, just like all of us. And final reminder, Canslim works better when the NASDAQ is trending above an uptrending 50-day SMA line. Canslim works best, that's what we want, when the NASDAQ is trending above an uptrending 21-day EMA line. So one thought could be just wait, at least wait till we get above the 50-day moving average to even be taking pilot positions, or again, more aggressive investors may take some pilot positions. Marketsmith's new tool. So I covered all the new tools, or meant to cover all the new tools in our meeting, our big monthly meeting this past Tuesday. I left off, oh, that should be now added, sorry. Here, let me fix that. So I forgot to mention one on Tuesday. There's several in that new right-hand panel. I'm not going over those today, but the one I forgot to mention is that the daily volume percent change in the list at the bottom of the screen, or when you pull at the Marketsmith list, not at the top right of the chart yet. They haven't fixed it there, but down in the list, it's now truly pro rata based on the prior day's action minute by minute. So that they've upgraded this to match what the institutional investors get in the Panerai and Wanda systems. They had told us they were working on this. Hopefully the one at the top right of the chart will be integrated and matched soon also, but at least we have it. Up to now, it had always been straight pro rata and Marketsmith, so it didn't account for the fact the volume in real life is heavier in the first hour and the last hour. So that's a nice upgrade. Things to do now, checklist, things to keep an eye on, continue the normal weekend routine, as difficult as that may be. Focus on the relative strength line. We want to find the leading stocks right now that are showing early strength. Where are the beach balls that are being held underwater? Do post-analysis, recent market action, your trades. Great time to take a trading course. Matt and Oliver Kell both have new courses out. You can go back and review the old classic webinars in Marketsmith, including two in there that, 2 or 3 that Bill O'Neill is in. Get ready for next year. Write your sell rules. If you don't have written sell rules, it's a great time to do it. I spent 3 of our meetings covering that and walking through it from A to Z. Then look at the rally day, follow through day system. I covered that in detail at our meeting. Oh, another typo, sorry, this past week. Go back, watch the IBD podcast from this past Thursday with Jim Ropel. And then after watching that, think about what he said. Start looking ahead, thinking, hey, what stocks new names, not Upstart, not Affirm, not Zoom, not DocuSign. What could be the true market leaders when the M factor improves? O'Neill teaches us that the stocks that led in the last uptrend, only 1 in 8 of them will come back and lead again, and the average decline is 72% off the peak for true market leaders. So these were all great stocks. They're not great stocks now, and there's a very small percentage they come back. So we need to be thinking ahead. What are the names that are not on everybody's radar that are still strong, Canslim growth stocks with good fundamentals, good technicals, and good institutional sponsorship? So I put in here charts. This is actually list. So here's some good list for everybody to be reviewing right now. Of course, the Growth 250 and Marketsmith. And then here's something new in Marketsmith. We went over this Tuesday. The IBD Live Ready list has been put in Marketsmith. So Marketsmith subscribers have access to it, even if you're not an IBD Live subscribers. And this is one of only 4 what I call human intelligence lists. Everything else is artificial intelligence or pre-programmed computer parameters on investors.com. So the ones that are managed by very experienced human intelligence are Leaderboard, Swing Trader, and now we have the IBD Live Watch List and the IBD Live Ready list. And I'll show you where those are in just a second. And then there's a William O'Neill screen that's built into Marketsmith. That's a good one to review also. And I will say this weekend, I was very surprised in doing the weekend routine. I'm seeing more and more bases that now are complete bases. In other words, they have gone long enough. They're showing up in pattern rack. They're constructive. They haven't broken out yet. But this is a positive factor. We've now been in the chop fest enough that we are seeing some bases, and you can go through these lists and see these. So if we go over to Marketsmith, the William O'Neill screen, just click on screens. It's right there. You can bring it up. Has 102 stocks in it. You can use your oops, wrong tool, sorry. Can select column layout for whatever you like down here at the bottom, and so you can pull up those things. Those are the things I like to look at, so you can go through those. And then the other new lists are way down here. Go to reports, go to stocks, and then just scroll down. They're right under where they have the IBD 50, the Big Cap 20, the 85 index right there. So there's the IBD Live Watch List. How many are on it? It's usually, 160. Mainly Chris Kessel and David Saito Chung put this together. More helpful, I think, is the Ready list, which has 41 stocks on it. So if you just pull these up here, you'll see what I was talking about. So see, you have these, and I know this isn't a standard Canslim growth stock, and it's a stage 4 base, but you do have these bases showing up. Applied Materials, so you got a tight little flat base there. AMD, that one's extended. AMH, so you got a flat base, only 11% deep. So you can just go through these. There's another stage 2 flat base, and I'm not saying all these are Canslim stocks. You have to look at everything, but it is constructive that I'm seeing those bases. There's a RS line going to new high. Again, doesn't have enough sales, and Fidelity Contra Fund's in it. It does have some, at least one top-rated fund in it. So you can go through those lists yourself. I'm just kind of telling you where you can be studying right now. So we went through that. So our monthly meetings, so we just met this past week. You sign up for these at the Stockyard. I'll show you that site in a minute. So here's the agenda. We spent a lot of time on the educational topics, went through the Rally Day, follow-through day system in detail, the theory behind it, how it works, what are failures, what are indications of weakness, and then we went through viable gap up setups also. So our next meeting, I've just scheduled this, will be Tuesday, January 11th, 2022. You can sign up at the Stockyard meetup site, which looks like this. So you can go there and RSVP. Those are the long 2-hour meetings, really 2 hours plus. And I do live Q&A and chart review at the end if you have questions on particular charts. So you can sign up for those. Those are $12 a meeting starting next month. And then you also can join the Greenville East Side site. There's a ton of resources. Meetup's not very friendly to get there, but you just go to the More tab, message boards, and these top 2 pinned messages are for me. So if you go here, it says 2020, it's really 2021. So the current link to the group teaching portfolio is in there. The link to the coloring book is in there. I try to remember to update those each weekend, as well as a lot of other links to Steve Swetz's window of opportunity spreadsheet. There's a lot of things in there. So take advantage of those tools. Those are all free at the Greenville East Side IBD meetup site. So let's go back. Oh, and first timers that sign up for the January meeting, I send you a courtesy copy of the December meeting. And I know there's a couple new people from the December meeting. I still owe you the November meeting, so I will take care of that. And then here's the list of our prior meetings. If you're interested in ordering any of those, just send me an email at this address, say you're interested in that, and I'll send you the list and I'll send you the ordering instructions. And those get you the meeting recording, the slide decks, and any articles, links, other things that I sent out after those particular meetings. So that should be it. Merry Christmas to everybody. Hope you guys have a great time, and we, you know, we're starting over. 2022 is coming up, so hopefully we'll get through all this chop fest and move ahead. That's it. Merry Christmas.